traders, how are you? Vladimir here from Home Trader Club, and in this video I want to share with you my technical analysis following up the trading opportunity I shared with you in one of my recent weekly forecasts on Nasdaq, and I want to explain my further plan regards this one. Ready? So let's begin. Nasdaq, let's start. So as I just mentioned, this is a follow-up to the trading idea I shared on one of the recent weekly forecasts, where we were looking for this ABCD to complete and with the break of the rising line to go and make a sell. Make sure you watch the video I'm talking about. You can find it in my channel, or right now in the right top corner here you would find a direct link. I want you to understand why exactly I was after sell here and why I still anticipate Nasdaq to continue and push lower, and mainly down to where. So first of all, the sentiment. The sentiment is negative, like it or dislike it, with the fact that the Federal Reserve has hard times, seeing the the future where they would be able to actually go back and cut the rates. They were actually giving a hint that the rates might be going up once again, maybe even more than that. So the sentiment, it puts pressure. The banking system is under pressure. Everything getting more and more expensive, despite some other positive signs that maybe it's cooling down. So the pressure is still there, the sentiment is negative, and that's fundamentally speaking. Technically speaking, going all the way back to the same weekly chart, we are still holding this key zone here. Okay, and all that happened after we approached the zone with 3 big waves. So this zone of sellers, I like to call that, because swing highs of the previous trend represent the area where the sellers took control, and this area still holding. Now take a look what happens here with the weekly chart with the Bollinger Band indicator, right? We were riding on the upper Bollinger Band for over than 20 candles. By itself, it puts the pressure here to go and retest the opposite Bollinger Band on maybe even beyond. So with all that being said, the pressure is yet negative. Going back to the daily chart, and we can clearly see that also this low was broken. Let me just draw it. Okay, this low was broken. We got lower lows on the chart, lower lows on the indicator, classical convergence or price versus indicator synchronization, everything lined up. We got a beautiful zigzag as we were following in one of the recent weekly forecasts, and we got the bomb to the downside. So this zone here, right, this little, I know it sounds ridiculous to pay attention to this zone, right, but in fact this is the most recent demand area. If you think about that, in the momentum the buyers were gaining, this was the last stoppage the sellers actually had, right? From here the buyers took the control, pushed it one more time, and now this area is holding. So this zone is holding. There is an end of months and end of quarter coming on these days. There could be some volatility, and we might see some position closure of the earlier sellers. However, it does not change the current sentiment. It does not change the fact that the most recent trend line is broken, and there is a great chance that as long as this zone holds, any pullback from there would be just to continue lower. So for those of you who are involved in the sell with this ABCD line, once again, as we discussed in the weekly forecast I mentioned before, this is a good place due to the end of the month and the fact that this zone is holding, and between these lows we do have histogram bullish divergence, lower lows on the chart versus higher lows on the histogram, making it bullish divergence, right? Negative, positive, higher negative, bullish divergence conditions, right? But for the longer run, I don't think it's over. I think any sell here should be a further sell back to this broken resistance that is now a support, and the next massive inner zone, or in the Fibonacci terms, in between 38 to 50% Fibonacci of this recent cycle we've had. And it's very important to pay attention that as long as this zone actually holds, because this is the key zone for us, right? And we got this massive volume profile based zone, and it's key it holds. So as long as it holds, I would be after sells here, of course. My preferred management in such cases is simple, is cashing out due to the good positive risk reward, cashing out part of the earlier sells, because this was the ABCD we were talking about, right? A sell here versus this high provides a great risk reward, and it's a good zone to cash out partially. And then if we really get a pullback and the next sell setup forming to make it again a sell opportunity, then the add-on would not be from the pockets, it would be already from realized cashed money from profits that we take. So imagine we take here like 2% profit, for example, and then the next sell coming, next opportunity, we add on the partial ongoing sell, and this time we're not risking from zero, but from a 2% profit we take, and we have like 1% or 1.5% risk now, adding on and risking only from realized profit already. Okay, so this is my trading plan on Nasdaq sell the rallies as long as the key levels hold. Let me know what do you think about this one in the comment section below this video. And I would like to thank you for your time watching this video. I hope, as always, you find value watching it. Make sure you click this like button if you do. And if you are new to the channel, please consider to subscribe to our channel. And I would like to invite you to our trading family, the Home Trader Club, where you get your access to everything, as you can see on this very image here. Full trading courses, real-time trading opportunities, real-time trading education, live sessions on a weekly basis, access to the community, and so much more. So join us with the link below this video in the description. Thanks for your time. Best to you and yours. I'll see you soon with more. Good trading.